Hi people. So I'm back with mock test paper number 2 as I told you at the end of the mock test paper number 1 discussion. But the small difference is in the mock test paper number 1 we did it really long. We took it up to 6 hours plus wherein I discussed everything in detail and we solved the entire paper in detail. However, this is going to be a little different on special request from all of you people. So what I'm going to do in this particular video is I'm not going to discuss every answer in detail. I'm just going to run through the answer and then tell about few working notes and then few tricks of the trade and few parts where you could have gone wrong or where there is small amount of doubtness that's basically there in this particular paper. So come on, without wasting much time, let's get started with mock test paper number 2. And at this point, when I'm discussing this, I'm of a strong belief that you people have already received this answer script also to you with you people. Can I safely assume so? Oh yes, here it is. Come on, let's get started. So the first thing, as usual, is our compulsory question, which basically deals with true or false. So the first question basically goes like, state with reasons whether following are true or false. We'll do it. First one, purchase return account cannot be adjusted in rectification entry if the error is identified after final accounts. If the error is identified after final accounts, we cannot use the items that will affect profit or loss in the rectification entry because this error belongs to the previous year, and if I identify the error in the current year and in the rectification process, I am not correcting my previous year profit. In fact, I am misguiding my current year profit. Last year, my sales were wrong. If I adjust the sales in the current year, it will affect my current year sales, not the previous year sales. Previous year financial statements are already drafted. It will also impact my current year profit or loss. So, when the rectification is done after identification of the errors, after preparation of final accounts, the rectification entry cannot include nominal accounts or it cannot include items which will affect profit or loss. We would have to use the word P&L adjustment account. I repeat, whenever we do rectification after final accounts, rectification entry cannot include items which will affect profit or loss. They would have to be replaced with P&L adjustment. So this statement here is true. Have a look. True. Items affecting profit or loss cannot be used in rectification after final accounts. We would have to be using P&L adjustment account. Let's go to the second one. Revenue generation capability of an item is considered in the treatment of considered in treatment as capital or revenue. In order to determine whether a receipt or an expenditure is capital or revenue, we have multiple considerations. We would have to check the nature of business, purpose for which the expenditure is incurred, and then materiality of the item, recoverability of the expense, economic benefit and the period for which economic benefit is received, also the revenue generation capability. If an item has a capability to generate revenue, that item is not revenue and it is capital. I repeat, if an item has a capability to generate revenue, it is not a revenue item, it is a capital item. If doesn't have the capability to generate revenue, so it is short-lived, so it will be treated as what to say the revenue item. For instance, this pen doesn't have a capability to generate revenue. I use this pen and then throw it. Then this is revenue. However, this computer what I use, it has a capability to generate revenue. It will become capital item. I'm assuming this to be a normal 10 rupees pen, 10 rupees pen or 10 rupees pencil. That's the basis on which I told this. I'm not referring this to be a what is an e pen or a touch pen which goes up to 10,000, 12,000 rupees. No, no, no. I'm referring this to a normal pencil. So its revenue generation capability is an important consideration to determine whether an item is capital or revenue. The answer is true. Yes, revenue generation capability is a valid consideration. Let us go to the next one. Closing stock can never appear in trial balance. You might jump in and then say, sir, this is false, sir. Closing stock can, sorry, yeah. Closing stock can never appear. You'll say, yeah, sir, true. Closing stock can never appear. No, closing stock usually doesn't appear. I repeat, don't use the word never. It is trading. Closing stock usually doesn't appear. Yeah, when does it appear? Closing stock appears in the trial balance when instead of purchases in the trial balance, they end up writing adjusted purchases or cost of goods sold. I repeat, closing stock appears in the trial balance when instead of purchases, they end up writing cost of goods sold, cost of goods sold, or they prefer writing adjusted purchases. In that case, the credit of the closing stock is adjusted, meaning the trading account item. Opening stock plus purchase minus closing stock gives us adjusted purchase or COGS, which is written on the debit in trial balance. And closing stock, which is supposed to be written after the trial balance, is written in the trial balance on the credits in the debit side, because it will be posted to balance sheet. The credit aspect of closing stock is being considered and adjusted with COGS. So the answer is can never appear is false. It can appear when in the case of adjusted purchase. Have a look. False. It can appear when the trial balance is trial balance mean what is replaced? Purchases is replaced with adjusted purchases. Or you can either ways call it cost of goods sold also. Come on, let us go to next one. So we have after that all the expenses incurred by consignee is selling expense. Not necessarily. Consignee is the recipient of goods. When such recipient receives the goods, expenses incurred by the consignee till the time the goods will reach his godown is non-selling expense. I repeat, expenses incurred by the consignee till the time the goods will reach his godown is non-selling expense. Once the goods reaches his godown, the expenditure that he incurs is selling expense. I repeat, expenditure incurred till the time the goods will reach the godown is non-selling, and after that it is selling. So consignee can incur selling as well as non-selling expense. However, consignor's expense is always non-selling expenses. So consignee's expense can be selling expense or non-selling expense. And the statement says all expenses. It is false. False. Have a look. False. Not all the expenses are selling expenses. There can be expenses which are selling. There can be expenses which are non-selling. When is it selling? When is it non-selling? Before goods will reach the warehouse or storage, it is non-selling. After the goods will reach the godown or warehouse, selling. That's the answer. Come on, let's go to the next one. Shares cannot be issued at discount. Prima facie, the answer might look yes, true, true, true. But don't jump into conclusions because we have to see section 53 little neatly. Section 53 of Companies Act 2013 says that shares cannot be issued at discount. I agree. But I'm not done. I'm not done. Listen. Section 53 says that shares cannot be issued at discount. However, notwithstanding anything provided in section 54 is clearly mentioned there, meaning shares can be issued at discount under section 54. Shares can be issued at discount under the provisions mentioned under section 54. That is employee stock option plan or stock option plan. Basically to employees, when you give by sweat equity share or something, you can issue them at discount. You get that? So shares can be usually not issued at discount. However, there is an exception. Have a look. Section 53 of Companies Act says that cannot be issued at discount except for the shares issued under section 54. So section 54 is an exception to section 53. So can shares be issued at discount? Yes. Under which section? Section 54. Can all the shares be issued at discount? No. Usually, no. Yes. Let us go to next one. JLP proceeds on death of a partner will belong to deceased partner's executors. Okay. What is JLP? It is joint life policy. It is a policy taken by the partnership firm. I repeat, it is the policy taken by the partnership firm on the lives of all the partners. Because if one of the partners dies and then they do coffin dance, then what happens? The other partners have to repay his capital, and the capital might be huge. Then what might happen? They might fall short of money. In such a case, the death of a partner might lead to dissolution of the firm. They will not just take the coffin of the death partner. They might have to take the coffin of the entire partnership and then dance. So that's the case. So in order to avoid such a situation where the death of a partner is leading to dissolution of a partnership firm, they go for JLP, that is joint life policy. Here, the partnership firm takes a life policy on lives of all the partners. Partnership firm pays the premium, and such premium is expense. When the JLP money is claimed, assume that one of the partner dies and coffin dance is over. You receive the money. Such money, when you receive, it is income to the partnership firm. It is income to the partnership firm. However, that cash what is received is used to repay the deceased partner. Now you might say, sir, aren't you contradicting? No. There are two aspects on receipt of money. How many aspects? Two aspects on receipt of money. One, the cash that is received. Second aspect is the credit aspect. When you receive that claim money, the journal entry is cash account debit to JLP account. Cash account debit is the cash received, asset aspect. To JLP is the income aspect. Cash will be used to pay the deceased partner's claims. To JLP is the profit or the income which will be shared to all the partners. Get that? Here this says entire JLP process belongs to deceased partner. Who paid the premium? Partnership firm. Who bears such expense? Partnership firm. Now that income belongs to partnership firm. Partnership firm means partners. So it has to be shared between all the partners. Have a look. Look. Proceeds of sum assured on death of a partner as received by the firm belongs to the firm and is shared by all the partners in profit sharing ratio. However, the proceeds, cash proceeds, is used to settle the claims of the deceased partner. I hope this makes sense. I put in little effort when I devised these questions because, however, the first paper that we took was completely from ICI publications and ICI sources. So I wanted to keep this one little hatke and then give those questions which might give you little jatke. I wanted to make this completely on my own and not pick from any of the ICA sources. So these questions you might not find it in here. So all these things I basically devised it so that it will make you think a little. I hope it has. Yeah, fine. Come on. Let us go to the second part of the first question. That is a compulsory question. Rectification of errors. Wow, come on, let's do this. The first one, they want us to pass journal entries guys, straight away. So if it is one-sided, our rectification entry will have suspense. If it is two-sided, our rectification entry will not have suspense. Perfect. A sum of rupees 470 received from Ramurthy Aure. Ramurthy Aure has given us 470. So what exactly is the correct entry that I'm supposed to pass? I'm supposed to pass the entry as cash account debit to Ramurthy Aure account. What I've done was posted to the debit. I told you the correct entry is cash account debit to Ramurthy Aure. I'm supposed to credit Ramurthy by 470. What have I done? Wrongly debited by 740. Two mistakes here. First one, I'm supposed to credit 470. I'm not credited. So credit to Ramurthy 470. Second thing, I've wrongly debited 740. That wrong debit should also be created. Wrong debit should also be created. So the credit to Ramurthy Aure will be 470 plus 740. I repeat, the credit to Ramurthy Aure will be 470 plus 740 because the correct thing is credit 470, wrong thing is debit 740. In the correct thing plus the wrong thing, both have to be added and credited now. Done. Right side, you are supposed to go 2 kilometers. By mistake, you went left side 1 kilometer. Now from this mistake place, how do you reach the right place? You have to take right turn and then go 3 kilometers. Why? 1 kilometer right to compensate for the wrong left, and then 2 kilometers further right to reach the right destination. I repeat, you are supposed to go right side 2 kilometers. By mistake, you went left side 1 kilometer. In order to compensate from that mistake point, you have to take right turn and then go 3 kilometers. Why? 1 kilometer right to come back to original place where you went wrong, and then 2 kilometers further to reach the destination. So I would have to credit Ramurthy Aure by 470 plus 740. That comes to 1210. Credit to Ramurthy Aure 1210. Sir, what about debit? Suspense. Sir, when will you reveal suspense? I'm not revealing. This is only revealing of suspense. When they prepared trial balance, it didn't tally. Then they had written suspense. Now we're revealing. So what is the entry? Suspense account debit to Ramurthy Aure account 1210. If you guys are not finding this really comfortable, you can go back and then do wrong entry, reversal of wrong entry, and the correct entry approach. If it was the first mock test paper, I wrote it detailedly. Wrong entry, reversal of wrong entry, correct entry, then added the reversal of the wrong entry plus the correct entry, and then arrived at the answer. I can still do it, but if I end up doing that, this entire video of this mock test paper discussion might go for like 5-6 hours, which you people don't want. You people want it to be crisp. So I'm telling the answer. You guys can rewind and then hear me again, or you can do it in that way. Yeah, because you people are gearing up to write your exam in a week or two from now. No, I think you people are very well versed with all these topics, and you don't want it to be feeded in the spoon right into your mouth in that way. Let's go to second one. So what's with regard to second one? Second one is debit balance of rupees 550 in the personal account of Mr. Rangraj, the musician. What has happened? The debit balance of 550 has been undercast, meaning it is reduced. Debit side they've reduced by 550. What do? Debit side will increase by 550. Debit side has been reduced by 550. Now we would have to increase the debit side by 550. So I will increase my debit side by 550 by debiting Rangraj account 550. Credit will be suspense. See, Rangraj account debit to suspense. How much? 550, 550. I hope it's clear. Not very difficult ones. Easy ones. Bills receivable from Brown. Bills receivable is an asset. Okay, we were supposed to debit it. Rupees 3000. Post it to the credit of bills payable. Listen. It is bills receivable should be debited. Have they debited? No. What will we do? Debit it now. Debit bills receivable account by 3000. Next thing. They have wrongly credited bills payable. Wrong credit is to be compensated by debit now. So I would have to debit bills payable. So what exactly is my rectification? Bills receivable account debit 3000. Bills payable account debit 3000. So why bills receivable debit? Because it has to be debited. They have not debited. I will debit now. Next. Why bills payable account debit? Because bills payable was not supposed to be created, wrongly credited. So to compensate, I'll debit now. So my journal entry will be bills receivable account debit, bills payable account debit to what? You would have to read it further to check if it is two-sided. Let's read further. And credited to Brown's account. Brown's account they've correctly created. The correct entry is bills receivable to Brown account. So in the Brown account they've correctly recorded. So there is no error. So it will be suspense. If they wouldn't have given, then we might have considered rating Brown. So right now, what is the rectification entry? Bills receivable account debit because it was not debited. Bills payable account debit because it was wrongly created. To suspense. Why? Brown account where there is no mistake. And the amounts will be 3,000, 3,000, 6,000. Have a look. Look. Bills receivable account debit, bills payable account debit to suspense. 3,000, 3,000, 6,000. That's with respect to our third one. Come on, let's now go to the fourth one. Fourth one. Goods returned by Rajanna. Returned by Rajanna. So what is it? Sales return. A customer has returned, Rajanna has returned goods to us. It is sales return. We had previously sold goods to him. He was not happy with the goods. So he returned the goods to us. Possible. Yeah. 225. Have been entered in return outwards book. Sales return is return inwards. What is sales return? Return inwards. Return outwards refers to purchase return. What have they done? Goods are coming in. You have to debit sales return. They have not debited. Where did they write? They wrote in purchase return. So purchase return has been wrongly credited. Sales return which was supposed to be debited was not debited. I repeat, sales return which was supposed to be debited was not debited. Purchase return which was not supposed to be touched at all was wrongly created. And the entire thing has affected Rajanna account also. Get that? Because they have not mentioned, no? You guys get that? So what is it that I should do? Sales return was supposed to be debited. I hope you're clear. They have not debited. What will you do? Debit sales return. Perfect. Purchase return was wrongly credited. So I'll debit that also. So sales return account debit, purchase return account debit to Rajanna. And the impact on Rajanna account will be double the amount. That is 225 plus 225, 450. So the journal entry is sales return account debit, purchase return account debit to Rajanna account 450. Have a look. Sales return account debit, purchase return account debit to Rajanna 450. I hope you guys got that. So we're done with that part. Come on, let's go to the next question. The next question that we have is with respect to valuation of inventory. Perfect. You are required to ascertain the value of inventory as on 31st of March. This is again those timeline problems. You would have to find the value of inventory as on 31st of March. That is end of the year. But due to technical reasons, they will not be able to take the stock as on 31st of March. They will be taking it after. Like with respect to our clients also, what happened was 31st of March, we were supposed to take stock audit of a lot of our clients. Same client, one had a branch, one branch was in Mumbai, one branch was in Kolkata. We were supposed to take Kolkata branch, Mumbai branch, both the stocks. Now, one person, I cannot be at both the places, or my office team is not sufficient to visit both the place and then take the stock taking. So we told we'll take April 10th in Mumbai and April 20th in Kolkata. We had told that, but things turned out to be really bad. Pandemic hit us in mid-March and then stock taking never happened. So that's a different thing. Let's leave that. If in case I had taken the stock as on 15th of April and 20th of April, these two places, can I write that 15th of April and 20th of April stock in the balance sheet which I'm going to sign? No, I can't. I would have to write the stock as on 31st of March all by itself. How do I find the stock as on 31st of March? If I take the stock on 15th of April, I will eliminate the transactions that has happened between 31st of March and 15th. I'll repeat. I'll take the stock as on 15th of April, eliminate what has happened between 15th of April and 31st of March. That's how I'll arrive at 31st of March. You get that? If you guys can understand, I'm taking 15th April as the base and I'm going backwards in time. 31st of March. I'm going backwards. Backwards, you do ulta. When you're going forward, you add purchases, subtract sales. I repeat, when you're going forward, you add purchases, subtract sales. When you're going backward, you add sales, subtract purchases. When you're going backward, you add sales, subtract purchases. I hope you got this point. Come on. Having said this, let's go ahead. Trader prepared his accounts on 31st of March. Okay. Due to some unavoidable reasons which every business has, no stock taking could be possible till 15th April. Obvious. Okay. On which date the total cost of the goods in the godown came to 50,000. So they've given cost. Everything is at cost. So sales and all, when they give it will be at selling price. We would have to firstly identify the cost price of such goods and then include them. Okay. The following facts were established between 31st March and 15th April. So following things have happened. We'll reverse them. Don't worry. Main hu na. Sales of rupees 41,000 includes cash sales 10,000. कुछ फर्क पड़ता है? फर्क नहीं पड़ता है. It doesn't really matter whether it is cash sales or credit sales. Sales is sales. What do we do with respect to sales? Sales has to be added or subtracted? Added back. Why? Because this 50,000 is there, no? Is after deducting this 41,000 worth goods. But on 31st of March, you had these goods, isn't it? So you have to add this to that. See, at the end of the day, I have 2 chocolates. During the day, I ate 1 chocolate. How much did I have in the morning? 3. Out of 3 chocolates I had in my pocket in the morning, I ate 1 and I'm still left with 2. So if I tell you at the end of the day, there are 2 chocolates. And during the day, I ate 1 chocolate. In the morning, I might have had 3 chocolates. I'll add. So I need to add it back now. But important point is this is at selling price. I would have to subtract the profit element and then only take it. You get that? Next, they've given purchases 5,034, including cash purchase 1,990. फर्क पड़ता है कि नहीं? नहीं पड़ता है. It doesn't really matter. Cash purchase, credit purchase, all that matters is purchase to us. Purchases, the goods have come in. Goods have come in. When has it come in? These goods have come in between 31st of March and 15th April. Did I have these goods on 31st of March? No. But this 5,034 is part of 50,000. What should I do? I should eliminate this. It's like this. Morning, I had something in my pocket. I don't know how much. I don't know how much. At the end of the day, I have 50,000. At the end of the day, I have 50,000. During the day, I purchased 5,034. So morning, how much did I have? 50,000 minus 5,034. So technically speaking, purchases should be subtracted. You get that? Next, we have sales 10,000. This sales 10,000 should be adjusted with the sales. So what will my net sales become? I can call my net sales as 40,000. You get that? From this net sales of 40, I'll eliminate my profit percentage and then go ahead and then identify the cost of goods sold. Then what else do we have? On 15th of March, goods of sale value rupees 10,000 were sent on sale or return basis. It is only sent, not sold. So this 10,000 belongs to me. Does it belong to someone else? No, it belongs to me. On 15th of March, these goods belongs to me. What have I done? I've sent, I've not sold. I've sent, I've not sold. If it is sold, it is different case. If it is sent, that guy has an option to return. You get that? So this is only change in the possession. It's only change in the possession. Okay, sent on sale or return basis to a customer. The period of approval being 4 weeks. Now tell me what is the approval period? 15th of March I have sent. 4 weeks usually comes to 15th of April. So within 15th of April, he has to accept it or he has to return it. After 15th of April, it is assumed to be sold. Done. We are taking the inventory as on what date? 31st of March. We want the values on what date? 31st of March. On 31st of March, is this 10,000 worth goods sold? The answer is no. On 31st of March, this 10,000 worth goods belong to me. On 31st of March, this 10,000 rupees worth goods belong to me. They are mine. They are mine. I would have to include this entire 10,000 selling price worth goods in my inventory. I would have to include entire 10,000 worth goods in my inventory. Let us see what has happened further. He has returned 40% of the goods on 10th of April. He has returned 40% of the goods on 10th. When he returns that 40%, that would be part of my stock as on 15th April. So out of 10,000, 40% is included. That 50,000 whatever they gave is on 15th April. So that 50,000 includes this 40%. What about the remaining 60%? That we would have to include. Why? Read it further. Approving the rest. Approving when? 10th of April. So when is it sale? 10th of April. Is it sales on 31st of March or before? No. So I would have to add back 60%. So what is it I have to do? 60%. 6,000. Selling price 60,000. Selling price 6,000. This is sold on 10th of April. I need to add this back to my stock. This is selling price again. Remember, I need to adjust the profit element. What do we have lastly? Goods are sold by the trader at 20% on sales. It is easy. They've given on sales. If they would have given on cost, then I would have to done 1 by x plus 1 and everything and then found it. Pretty simple. Okay, guys, come on. Let's see the solution. 41,000 is the sales. 1,000 is the sales return. So net sales 40,000. I would have to do 40,000 minus 20%. 8,000 if I subtract. 32,000 is to be added with regard to sales. Have a look. 41,000 minus 1,000. 40,000 minus 8,000 gross profit. 32,000 is to be added back. Then what exactly is the purchases? 5,034. 5,034 is to be subtracted. Have a look. 5,034 purchases subtracted. Next, with respect to this goods sent on return or approval. 40% is included back in the stock. 60% has to be included. 60% of 10,000 is 6,000. This is at selling price. 20% is the margin. If I subtract 6,000 minus 20%, that is 1,200. I'll arrive at 4,800. 4,800 should be added back. I will 4,800. 80% of 6,000. Done by 20% profit. How do I get 6,000? 10,000 into 60%. Yes. And finally, we'll arrive at 81,766 as the value of the inventory as on 31st of March 2018. So what is this? 31st of March 18. Inventory as on 31st of March 2018 is this one. Perfect. Okay. Next, we have with us the question on consignment. I made this question a little interesting. What it was, I didn't just put the accounting from the perspective of the consigner. I put accounting from the perspective of consignee also. And I put in little things like normal loss as well as abnormal loss. So this one is a tricky one. If you actually solve this during your test time, which you took at home, I'll be very impressed. And trust me, this is a very nice question. One of the very nice questions on consignment, you can say. There is not a great commission computation. You get that, no? There can be that equation kind of an commission computation. That is the only thing that's not there in this. Otherwise, this is a very comprehensive and completely nice question. Come on, let's go. So they've asked us accounting in the books of consignor as well as consignee. In the consignor's books, they want us to do consignment, goods sent on consignment, abnormal loss, and consignee account. And in the consignor books, in the consignee books, we have to prepare only consignor account. I think I've given extra in the key answers. It's okay. Enjoy. Move there. Ash karo. Okay. Gorgeous oil mills, Banshankari sent gorgeous oil mills. Banshankari has sent 5,000 kgs of castor oil on consignment to Mr. Manjunath of Kolkata. Okay. Now, this gorgeous oil mills is consignor and Manjunath is consignee. Perfect. How much is sent? 5,000 kgs. Very good. The cost of the oil is 460 per kg. So we would have to do 5,000 into 460. 5,002 into 460 is 23 lakh. 23 lakh rupees is the goods sent on consignment. The journal entry will be consignment account debit to goods sent on consignment. I repeat, consignment account debit to goods sent on consignment. Have a look. Consignment account debit to consignment. I would say goods sent on consignment. How much? 23 lakh. How did I get this 23 lakh? This 23 lakh is basically 5,000 kgs into 460. Not a difficult part. Okay, then gorgeous oil mills paid rupees 2 lakh as packing of freight and insurance. So these are non-selling expenses incurred by consignor. Again, for this expense, the journal entry would be consignment account debit to cash account, because consignment expenses debited to consignment, it will increase the value of consignment stock, and cash outflow. So consignment to cash. Yeah, bank basically. How much? 2 lakhs. Whatever is paid. Perfect. Let us go to the next one. And during transit, 125 kgs were accidentally destroyed. Accidentally destroyed. For which what is it? Insurers paid directly to the consignor. Okay, consignor has received 45,000 in full settlement. Now, what is the value of these goods? How many kgs? 125 kgs. You might jump in and then say, sir, 125 into 460, sir. So 57,500, 57,500. No, it is not 57,500. What we usually do is 125 kgs, we multiply it by 460 per kg. The answer is not that way. Now, listen, we have bought 5,000 kgs at rupees 460. That comes to 23 lakh. Plus, we incurred 2 lakh rupees on carriage, freight, and everything. 25 lakhs is the expense on 460 kgs. 25 lakhs is the expense on 5,000 kgs. Sorry, 5,000 kgs. So I'll divide it by 5,000. I'll get 500 rupees per kg. We would have to proportionally include this 2 lakh also. Why? These goods have been destroyed in the transit, meaning in the movement. Like you already paid for the freight, cartage, and loading. After incurring this 2 lakh expense, that 125 kgs are lost. So we will not just to do 125 into 460. 125 into 460 plus portion of this 2 lakh. This 2 lakh is incurred for 5,000 kgs. How much is it for 125 kgs? We have to do that. What I am doing is 5,000 into 460. That will give us 23 lakh. Plus 2 lakh, 55 lakh. That I divide by 460 kgs. So that I divide by 5,000 kgs and multiply by 125 kgs. So I'll get 5,000 into 460, 23 lakh plus 2 lakh, 25 lakh, 25 lakh divided by 5,000 into 125. 62,500 is the value of the goods lost. Is this normal, abnormal? Absolutely abnormal loss. Absolutely abnormal loss. It is not in the normal course of operations. In the transit, when you lose so much, how much is it? 62,500 is abnormal loss. Abnormal loss, to this extent, our goods will reduce. How much money have we received? 45,000. So 62,500 is the value of goods minus 45,000. 17,500 should be your loss. I'll show it to you. Now, abnormal loss. Consignment stock is reducing 62,500. Now, you would have to open abnormal loss account, and in the abnormal loss account debit side, you will write to consignment 62,500. Credit side will write buy cash 45,000. Difference is profit, I'll show, or loss. In the abnormal loss account, debit side will write 60,500, 62,500. Because in the consignment we wrote credit, no, by abnormal loss. The journal entry for abnormal loss is abnormal loss account debit to consignment account. Abnormal loss is an expense debit. Consignment stock is reducing credit. Abnormal loss is an expense debit. Consignment stock is reducing credit. So the journal entry is abnormal loss account debit to consignment stock account. You get that? So abnormal loss to consignment, I've written 62,500. You received cash. Or if you have not received, you'll write insurance company account debit. 45,000. So this is the balancing figure. 17,500 is your P&L account. Why? Loss. You get that? Yes, we're done with this adjustment also. Come on, let's go to the next one. Were accidentally destroyed. Okay, 45,000 in full settlement. Manjunath took delivery of the consignment on 10th of January. Okay. On 31st of March 2012, Manjunath reported 3,750 kgs were sold at 600. How many kgs are sold? 3,750. At what price? 600. So we have to do 3,750 into 600. That comes to 22 lakh 50. What did I do? 3,750 multiplied by 600. To this extent, the consignment stock is reducing. There is profit element which will be found later, but to this extent, consignment stock is reducing. I would have to write on the credit of consignment account, and I would have to write debit of Manjunath account. Why? Manjunath owes us money. He has to collect that money and then pay us. So Manjunath account debit to consignment account is the entry. Have a look. Look. See, Manjunath account 22 lakh 50. In Manjunath account, I would have written on the debit side. Where is it? Debit side 22 lakh 50. You guys get that? So what is the journal entry? Manjunath account debit to consignment account. I hope you guys have understood till here. Let's go to the next part. What is there after that? Manjunath is entitled to a commission of 3% plus 1.5%, like auto driver, 1.5% Dale creditor commission. So Manjunath is supposed to be eligible for 3% ordinary commission and 1.5% Dale creditor commission. Now, on what will you compute this commission? Commission is computed on goods sold, not on goods received on consignment. Very important one. Commission is computed on the goods sold on consignment, not goods received on consignment. So basically, we had that how much 600 into 3,750, 22 lakh 50,000. On that, we'll charge this 3% and 1.5%. In this question, it's not given. But what if they had given credit sales separately? Then on what will we charge our Dale creditor commission? Should Dale creditor commission be okay? Firstly, what is Dale creditor commission? It is the commission paid by the consignor to the consignee to pass the risk of bad debts. The relationship between consignor and consignee is that of principal and agent. All the expenses, whether incurred by consignor or incurred by consignee, should be borne by the consignor. So if there is bad debts, who will bear the expense? Consignor. Consignee gets only commission. In order to shoot up his commission, what if consignee makes credit sales and those credit sales leads to debtors when those debtors don't realize money? It's bad, isn't it? Is the risk of the consignor. So what does the consignor say? He says, you want extra commission, I'll give it to you. But don't do this nakra. You collect the money and then give it to me. The consignee says, okay. But this commission is called Dale creditor commission. But if the consignor pays Dale creditor commission to consignee, then consignee should bear the bad debts if there is any. If one customer doesn't pay money, that money will be deducted from consignee's commission. Understood? So that's the point in this case. So in this case, there is no credit sale, cash sale difference. And always, Dale creditor commission will always be computed on the total sales only, unless they specifically mention in the question. If they give in the question, Dale creditor commission needs to be computed on credit sales only. If they tell that way, we'll do it on the credit sales. If they don't mention, we'll do it on the total sales only. Okay, now listen. 3% and 1.5% on 22 lakh 50. It is expense on consignment. So debit in consignment account. It is to be paid to consignee. So credit there. So journal entry is consignment account debit to Manjunath account. Have a look. Consignment account debit to Manjunath. How much? Commission 3% and 1.5%. Have a look. 22 lakh 50 into 3%. That comes to 67,500 divided by 2. 1.5%. 33,750. Total 1 lakh 1,250. Now, as the Del Credit commission is paid, if there is any bad debts, will the consignor record it in his books? No, he will not record. Who will record? Consignee has to bear it, and the entry will be made in consignee's books. Consignor is responsible to pay the entire money now. That entire sale 22 lakh 50 consignee has to pay, whether the customer pays or the customer denies. Got it? Okay. So here I've written to Manjunath. We're done with this. This isn't it? Okay. In Manjunath account, I would have to write by consignment 1 lakh 1,250. Have a look. Yes, this one 1 lakh 1,250 by consignment commission. These two. Okay, guys, come on, let's go to next one. So what are they given after that? Manjunath is entitled. A party which had bought 500 kgs was able to pay only 80%. Oh, some customer who bought 500 kgs. How much is it that they would have to pay? 500 kgs into what is the selling price? 600. So that's basically 3 lakh. 3 lakh person who's supposed to pay 3 lakh could only pay 80%. So 3 lakh. How did I get 3 lakh? What I did is 500 kgs multiplied by what is the selling price? 600 per kg. And this person pays 80%. I'll do minus 80%. How much did they not pay? Yeah, 3 lakh minus 80%. So they didn't pay 60,000. 60,000 is bad debt. And this bad debt entry will be made only in consignee's books. Consignee's books may record. I'll show. Have a look. So in the entire this statement here, there is no mention of 60,000. Why? It is not his expense. He doesn't bear. He doesn't bear. Will the consignor bear? No. He says Nangen Samanda. Nangotilapa. So now we'll go to accounts of, have a look. Where is it? Accounts of Mr. Manjunath. In the books of Manjunath. Have a look. You would have written expenses. Bad debt. That is Gorgera. Yes, have a look. Sorry. 60,000. P&L account it gets transferred. Consignment bad debt account debit to consignment debtors account. Debtors will not pay. Debtors will reduce. Credit. Bad debts an expense. Debit. So bad debts to debtors account, and that is getting posted to his P&L account. Understood? This entry will be made only in consignment books. It will not be only in the consignee's books, not in the consignor's books at all. Fine. So we're done with that also. Manjunath reported a loss of 50 kg due to leakage. 50 kgs is lost due to leakage. Okay. So non-selling expenses are not considered in this particular part. So that whatever we did know previously, abnormal loss calculation. Similarly, we would have to compute our closing stock. So what do we do? How much kgs? 5,000 kgs we had. Am I right? In that, how many kgs are lost? 125 kgs are initially lost. Then 3,750 kgs are sold. So we'll be left with 1,125. In that also 50 kgs is lost due to leakage. So 1,075 kgs is the closing stock. Have a look. 1,075. Closing stock computation. Yeah, 5,000 kgs में से 125 is lost, 4,825, 50 leakage, 4,875, quality available for sale, 4,825. This is the computation. Basically, we need to take that purchase price and then we need to take that non-selling expenses incurred by consignor. We add it, divide it by the total stock value and then multiply it by the closing stock value. We'll arrive it at that way. Yeah. Yeah, stock on consignment. That's the part, and that's an easy one, not much tricky. And we'll find this profit and loss as the balancing figure. And this goods sent on consignment has come from consignment account, and the same thing will be reduced from our trading account purchases. Abnormal loss account closed, closing stock consignment. We write this and then we carry it forward to the next year. And the Manjunath account balance is paid by draft. They've given to us in the question. So this includes some amount of loss that is bearing. So this is balancing figure. I hope you guys got it. For this part, I didn't explain. There's some expenses incurred by consignor. Sorry, Kanzaini. What are the expenses? Where is it? Oh, sorry, I didn't read this. 30,000, advertisement 40,000, salary 64,000. All that is basically added up here. 30, 40, 64. And you would have to pay it to him. In fact, we'll reduce it from the consideration that he's supposed to pay us and then pay the balance. And that's it. Abnormal loss calculation, whatever I taught you. And closing stock. 5,000 may say 125 abnormal loss, 4,875. And from that 50 kgs, if it is lost, 4,825 is there. And 24 lakh, that is 1,500. That is after deducting that abnormal loss part. Yeah, 24 lakh, that is 1,500 is the basic 4,875. And for 1,075 kgs, I told you 1,075. How? 5,000 kgs may say, what not? 5,000 kgs may say 125 is abnormal loss. You get 3,150. 1,125 sold, then 50 kgs is of normal loss, then we get 1,075. That is our value, and then we multiply it to arrive at 5,43,070. And then we have accounting in the books of Manjunath. Same thing. It will be opposite from there. Their debit will become credit here, credit will become debit here. Not very tricky. I hope you can make sense out of that part. Okay. So by this we are done with question number 2. Now we would have to go to question number 3. So starts with the third question now. From the following particulars, ascertain the bank balance as per passbook. So they want us to ascertain the bank balance as per passbook. So our starting point will be bank balance as per cash book, without correcting the cash book balance and after correcting the cash book balance. So basically they're asking us to do it no difference between timing and non-timing differences first, and then the difference between timing and non-timing differences. Fine. That is like with adjusted and adjusted or amended cash book, without adjusted or amended cash book. Perfect. So the balance as per cash book is 40,000. That's our starting point. Then checks issued but not encashed. When the checks are issued, the cash book balance is reduced, but these checks are not encashed. The passbook balance is not reduced. When the checks are issued, cash book balance has come down, whereas the passbook balance has not come down. So where are we making changes? Cash book. What is it that I have to do? I would have to add one. So this is an add item. I would have to add this. But another important point is this is a timing difference. What difference is this? Timing difference, meaning this is arising only because of the time. Once those checks are issued and cleared, this difference will not be there anymore. Perfect. Next one, checks issued but not. Oh, I would have to write a little below. Timing difference and plus also will come here. Next, checks paid into the bank but not yet. I have deposited the checks. When I deposited the checks, my cash book balance has increased, whereas passbook balance has not increased because the checks are not clear. Where am I making changes? I'm making changes in my cash book, so I have to reduce it. So this is a less item, and this is again a timing difference. This is again a timing difference. Perfect. Next, interest on investments collected by the bank. So banker has collected the interest. So banker would have increased my passbook balance, whereas the entry is not made in the cash book. Where am I making changes? Cash book. What is it that I have to do? I would have to increase it. How? Add. This is an interesting part. This is a non-timing difference. Why? It's an error. It's an error. So this is a non-timing difference. We'd have to adjust our cash book to this extent. Perfect. Next, checks deposited in the bank but not entered in the cash book. You have deposited these checks in the bank and the banker might have cleared them also. So passbook has increased, but you have not entered in the cash book. So cash book has not increased. Cash book is below. Where are we making changes? Cash book. What is it that I have to do? I would have to add it to increase. So this is an add item. Okay. Now tell me, is it timing difference or non-timing difference? It's an error in the cash book. Error in the cash book is a non-timing difference. Error in the cash book is a non-timing difference. Perfect. Next, bank charges debited in the passbook but not entered in the cash book. When you debited bank charges in the passbook balance has come down. It is not entered in the cash book. Cash book balance has not been affected. What do we do in the cash book? We would have to reduce it. How? Subtracting. Minus. And this is again an error of omission, non-timing difference. Are those the errors? Yes, that's it. Sir, 10 marks. Bus itne ke liye. No, we'd have to do it twice, no? Once we would have to do BRS before amended cash book. Then we would have to do amended cash book. And then we would have to do BRS after amended cash book. Now, first we'll do without correcting. If we do without correcting, I'll start with 40,000, add 10, subtract 15,000 plus 500 plus 12,500 minus 100. If I have to do after adjusting cash book, adjusted cash book or amended cash book, all these items which I've written here as what as my non-timing differences. This one, this one, and this one. These three have to be adjusted to my cash book balance. This 40,000 will no more be correct. To 40,000, I do plus 500 plus 12,500 minus 100. Whatever I arrive at, that will be my starting point in the BRS. There I do plus 10,000 and minus 15,000. Let me show the answer to you. Have a look here. So this is like simple cash book. I start with 40. What and all am I adding? I'll add 10, 500 and 12,500. 10, 500 and 12,500. Subtraction will be, have a look, 15,000 and 100. 15,000 and 100. Subtract it. That's it. We'll arrive at this. You get that? Now what will I do in adjusted cash book? I take these items. What are those items? Item number 4, 5, 6. Item number 4, 5. Okay, bank charges, interest and fixed deposit charges. Oh, this three, I guess. Yeah, I would have to adjust them. Have a look. What are those three items? 500, 12,500, 100. 500, 12,500. First, they are adjusted to 40,000. I'll arrive at 52,900. So this 100, 500, 12,500. This will come in adjusted cash book. Then I'll revise this. This 52,900 will be taken in this place, and then I'll add this 10,000. Have a look. Add this 10,000, subtract 15,000, because these are timing differences. They are arising because of time, and then it will be 47,900 only. Same thing, but the presentation becomes little different. Yeah, I've done a detailed video on this bank reconciliation statement. It's on the channel. You can watch it later if you want. But this is how it's done. You can go back to your class notes also as to how to deal with this adjusted cash book part. Come on, let's go to the next question. Next one we have NPO, one of the nice chapters, favorite chapters. Great. So we're done with the third one. Third one A done. Third one B we're trying to do. If I finish the third one, I'm done with 60 marks that way. Yeah, but it's not like 60% because the exam that you write is for 100 marks. Your maximum marks that you can score is 100, but the question paper is for 124 marks. My portion is little more than what you people do. Okay, let's go ahead. All right, club. All right, club provides the following information for the year ended 31st of December 2012. Okay, they've given receipts and payment account. This is nothing but the cash book. What do they want? Read the last line. You are required to prepare income and expenditure account and balance sheet after making the adjustments. Okay, let's do this. There are 450 members, each paying an annual subscription of 300. Okay, so how much is it? 450 into 300. 2,700 being in arrears for 2011 in the beginning of the year. So what is the current year income? 450 into 300. 450 into 300 is how much? 450 into 300. So much is supposed to be received. 1,35,000 should appear in your I&D subscription income. Have a look. Subscription income should be 1,35,000. I told you. 1,35,000. How did you get it? 450 members multiplied by 300. But they further mentioned in the question that 2,700 being in arrears for 2011. Which year are we doing? We're doing it for 2012. So 2011 May, how much was arrear? 2,700. So current year income is 1,35,000 plus previous year balance is how much? 2,700. So totally you are supposed to receive 1,37,700. Current year ka 1,35,000 plus last year ka 2,700. So you're totally supposed to receive 1,37,700. Look at the receipt side. How much is it there? Receipt 1,33,800. Okay, there is arrear, current balance as well as advance. That we would have to adjust it. Okay, now have a look. Have a look. Oh, there is opening balance sheet as well as closing balance sheet. 2,700 that was given in the question is here. Yeah, and then how much is received against that 2,700? 2,400 is received. How much is received? 2,400. Arrears was 2,700. 2,400 is received. Balance will be 300. I repeat, you are supposed to receive 2,700 for last year. You received 2400 now. 300 is still outstanding. 300 will be outstanding. Have a look. See, outstanding 300. You get that? Then 1,35,000 was supposed to be received for current year. You have received 1,26,600. So if you do 1,35,000 minus 1,26,600, 8,400 is basically still receivable, arrears, accrued but not received for the current year. And then you have received 4,800 in advance. That will become your liability. It will appear on the liability side. 4,800 is your liability. 4,800 what has been received in excess is a liability. Last year cut 2,700 was pending, of which during the year received 2,400. 300 what is still not received is an asset. For the current year, when we did that, how many 450 to 300, we got 1,35,500. Out 1,35,000. Out of that 1,35,000, only 1,26,600 is received. Balance is again my receivable. 8,700 is the still receivable with regard to subscription. 4,800 is the outstanding or advance received regarding this subscription. Then everything related to subscription has been posted. So I've successfully finished the first adjustment for you people. Stock of stationery as on 31st of December is 3,000 and 4,400. See, opening stock is 3,000. Opening stock is 3,000. Closing stock is 5,400. Let's see if there are any receipts. Meaning, have you made any payments regarding sales? Sorry, purchases. Stationery, how much did you purchase? 24,000. So beginning of the year you had 3,000. You purchased 24,000. It becomes 27,000. From that still you have 5,400. So 21,600 is the consumption. Okay, let's have a look. In the income and expenditure, you would have to write expense 21,600. See, 21,600. So how did you arrive at it? I'll say it simple again. You had 3,000 at the beginning of there, 3,000. Then you have made payment, that is 24,000. 24,000, okay, this is also done. 24,000 is paid in the sense purchase is of 24,000. So I'll do 3,000 plus 24,000. That will take me to 27,000. From that still 5,400 is remaining. If I subtract 5,400, it means that consumption is 21,600. Amount of stationery that I've used during the year is 21,600. So 21,600 is my expense. I've written in income and expenditure account. Okay, these are my expenses. These are my incomes. 21,600. Perfect. 21,600. And this is here. Okay, don't get confused by the amount lining. It's just a small typing error. Okay, guys, pardon us. Let us go to the next one. Cost of building 6 lakh, depreciation 5%. That's it. 6 lakh minus 5% is will be written in the balance sheet. 5%, whatever is that value. How much is it? 6 lakh into 5%. 30,000 will appear in income and expenditure side. Say depreciation. 30,000. 6 lakh minus 30,000, 5 lakh 70,000 in the balance sheet. 6 lakh in the opening balance sheet, closing balance sheet, 6 lakh minus 30,000, 5 lakh 70. So I've done with all the adjustments. All we need to know now is posting those items which are given in receipts and payment account. I finished all the 3 adjustments to you people, 10 marks ka question. Now I need to just post these items. Okay, receipts and payment, opening balance 60,000. It will be there in the opening balance sheet, 60,000 asset side. Have a look, 60,000. Then we have, this is done. Profit from canteen 90,000, income and expenditure, income 90,000. Have a look, income 90,000. Next, 4,500 miscellaneous receipts, 11,200 dividend. 4,500, 11,200, 48,500. All 3 are incomes. It will appear there. Have a look. 4,500, 11,200, 48,500 incomes. Perfect. Posted. Next, let's go to the payment side. Salaries 1,24,500 expense. 36,000 expense, 6,000 expense, 75,000 expense, 10,500 expense, 10,000 expense, 35,000 expense. So 1,24,000. Let's check these items if we have it in here. See, same things. 1,24,500, then 36, 6, 10,500, 10,000, 35,000. Same things, whatever are mentioned there. Same things. Lastly, I have one item here. That is my balance carried down. This will go to my closing balance sheet asset side. Closing balance sheet asset side. How much is it? That is my 27,000. This is that stock that is there. inventory, and that's it. Here are the investments. Investment is an asset. Investment is an asset. It will not go to our income and expenditure. It will go to balance sheet. I have written it in the balance sheet. 75,000. That's it. Then we'll find our income and expenditure by balance. How much is the balance that we got? 15,600. This 15,600 is added to our capital fund. Have a look. 15,600. Where did I get this 6,65,700? From here. From the opening balance sheet. This is the balancing figure here. We have everything on the asset side. And that's it. It will not happen so quick when you do it by yourself. It will take a little time, but it's worth it. Do this. So this is with respect to the NPO question. You guys get that? I hope you understood. By this, we're done with 3 questions. Now let us go to the 4th one. 4th one is with regard to the final accounts. A complete wholesome question. I guess 1 question for 20 marks. This one. Is it the one? Yes, 20 marker question. 1 simple question. Let's do this. Sorry, I had to take that strategic break. Let's see the 4th one. I've given 20 marks for this question because this is not a question only on final accounts. This is a question which has final accounts preparation after rectification of errors. So rectification of errors chapters need not be asked in isolation. They need not ask a separate question on rectification. They can patch rectification with final accounts and then ask it together. That's what is in this question. So don't ever read one chapter and then skip one chapter. Now, if you would have read final accounts but skipped rectification, or if you have read rectification, skipped final accounts, this is not an easy cake for you. You can't solve this question. It would always be incomplete. So chapters in CA Foundation are interconnected, and it's my humble request, okay, request, don't skip any chapter, read all of them, please. Okay, let us start. Following is the trial balance as on 31st of March 2016, extracted from the books of Mr. B. Kudka. Should I tell what is B? Gamma trial balance. Are you tallying? Check. Yes, it's tallying. I hope you got it now. If you got it, I'm happy. I'm not wearing glasses, but still, this guy is that Kudka. Okay, let's go. So capital. These are the trial balance items. What I'll do is I'll basically tell you where will these items go so that you'll find it easy. Or should I just straight away? Okay, fine. Let me show it to you. Or where will each of these items go? And then I'll patch this or match this with our trial trading account, P&L account, and balance sheet. So Kudka, this is the capital. It go to balance sheet liability side. Have a look. Balance sheet liability side. 3 lakhs opening capital. 3 lakh. Next, Kudka's drawings 12,500. Balance sheet capital, I'll deduct 12,500. 12,500 deducted. Next item. Furniture 50,000. It is asset. Balance sheet asset side. Balance sheet asset side. Furniture 50,000. Done. Next, plant and machinery again asset. Balance sheet asset side 70,000. Balance sheet asset side 70,000. Plant and machinery. Done. Next, what do you have? Stock. This is opening stock 45,000. Trading account debit side. I repeat, trading account debit side. Trading account, trading account, trading account, trading account, trading account. Debit side 45,000. Done. Next, bills receivable 10,000. Bills payable 15,000. This is asset. This is liability. 10 and 15. Have a look. Bills receivable, bills payable, 10 and 15. Bills receivable is an asset. Bills receivable is 10,000. Bills payable, liability, 15,000. Perfect. Hey, you are not be correcting in the exam. You would have to write it. I'm just telling it to you how it is to be written. Yeah, I can write it. In fact, if you can recall our MTP one, the video is still there. You guys can go back and then watch it. I've done in detail. I put the format very beautifully in Excel with the border, with the data, with the particulars, debit, credit, amount, every column I put. I can do that way. I can do that way. If I do it that way, it will become a really long video. And I know how busy it's for you people to watch such a long video. Your exam is just about a week or 2 left. So I'm hurrying up with this because you would have done RTP. RTP revision is also there. RTP revision is done. You would have done MTP, and then you're doing this as well. So you are at the end of your at the end of your CA foundation course, to be clear. All of you will clear CA foundation. See you all at CA end. So at the end, so I thought that Parex is not required anymore, or Cerelac is not required anymore. I can give you something which is digestible. Okay, Let us go to the next one. Sundry debtors 1,40,000, sundry creditors 1,60,000. Debtors asset, balance sheet asset. Creditors liability, balance sheet liability. Have a look. Debtors 1,40,000, creditors 1,60,000. Perfect. Then what else do we have? Purchases 2 lakh, sales 3,25,000. Purchases trading account debit, sales trading account credit. Purchases trading account debit 2 lakh, sales trading account credit to 3,75,000. Done. Next, carriage inwards, direct expense, trading account debit side. Carriage outwards is indirect expense, P&L account debit side. Both are debit side only. One is in trading account. Carriage inwards comes in trading, carriage outwards comes in P&L. When would it come in trading? When would it come in P&L? Direct expenses comes in trading, indirect expense comes in P&L. Carriage means to carry the goods and then bring. You incurred expense, carriage. Those expenditure can be incurred to bring the goods into the shop or can be incurred to sell the goods to customer. Now, when you purchase the goods from the place where you purchased to bring the goods to your godown, if you incur, it is carriage inwards, trading account. Once the customer sees the goods, the expenditure incurred to deliver the goods to the customer's house, it is carriage outwards. That is indirect expense. So 2,000 in trading, 1,250 in P&L. Have a look. 2,000 in trading, 1,250 in P&L, P&L. P&L is again separate. Okay. 1,250 carriage outwards. Done. Next we have freight 3,000, manufacturing wages, fuel, power, factory expense. So many 1, 2, 3, 4. These 4 appear in trading account. Have a look because these are manufacturing expenses or trading expenses. Freight carriage inwards is done previously. Then manufacturing wages, fuel and power, factory expenses. 1, 2, 3, 4. Those 4 expenses perfectly written. There are few adjustments, so the items are written in the inner column. When I come there, I'll show you that adjustments. I'll explain. Don't worry. मैं हूं ना किसका है ये तुमको इंतजार में हूं ना salaries is indirect expense P&L account debit rent P&L account debit this is asset this will go to balance sheet now let's see 45 and 15 in P&L account 45 and 15 15,000 rent 45,000 salaries how much is that prepaid rent of 6,000 go to balance sheet assets have a look balance sheet assets side prepaid rent 6,000 done. Next, outstanding salaries, it's a liability 5,000. Liability, balance sheet liability. Have a look. Outstanding salaries 5,000. Next, what do you have after that? Discount allowed is an expense, discount received is an income. P&L account 1,000 and 2,000. 1,000 and 2,000. 2,000 discount received income, credit side. 1,000 discount allowed expense, debit side. Next, printing and stationery 1,500 expense. General expense 1,500 and 4,500 are expenses. 1,500, 4,500. General expense and printing and stationery. Next, cash in and cash at bank. Both are assets. Both will appear in balance sheet. Have a look. Balance sheet. Cash in and cash in bank. 10,750, 1,68,500. Okay, what do you have after that? Provision for doubtful debts and discount on doubtful debts. Both are to be deducted. 2,000 and 1,000 from debtors in balance sheet. Have a look. Debtors may 2,000 and 1,000. There is adjustment. We'll see it along. Okay. There is an adjustment given. There is an adjustment given. We'll see them together. There's an adjustment. The provision balance is increased, but 2,000, 1,000 should be deducted. Let us see. If they've increased that, that difference would have to be adjusted. 3,000 is debit. P&L account debit side, expense. Have a look. P&L account debit side, expense. Bad debts. 3,000 P&L account debit expense. Okay, come on. Let us go to the first one. Errors are there. What are the errors? Purchases include sales return. 5,000. Firstly, purchases wrongly include sales return. So we have to subtract it from purchases and we have to subtract it from sales return also. See here, minus